The pricing gap analysis, how to find the most profitable position in your market. Most businesses assume that the busiest part of the market is where the money is. They see competitors clustered around a particular price point and assume that's where they need to be too. So they enter the same segment, they compete against the same companies, they lower prices, they fight for the same customers. But what if the biggest opportunity is actually somewhere else? What if there is a part of the market where demand is strong, competition is limited, and profit margins are much better? That's exactly what we are covering today. I'm going to show you how pricing gaps analysis helps you identify the most profitable position in your market and avoid competing where everyone else is already crowded. So let's get into it. Let's start with how most businesses set price. The first approach is cost plus pricing. You calculate your total cost and then add a margin. Simple, very logical, and very safe. The problem is that it completely ignores the market. It doesn't tell you what customers are willing to pay. It doesn't tell you whether you are underpricing yourself, and it certainly doesn't tell you whether you are entering an already crowded segment. The second approach is copying the competitors. You look at what others are charging, and then you set your price around the same level, maybe slightly lower, maybe slightly higher. Now, the problem with this approach is that you are letting competitors dictate your strategy. Whatever they do, you react to it. That isn't a sound strategy. That's following the crowd. And both methods suffer from the same flaw. They are focused on the wrong question. Cost plus pricing asks, what does this cost me? Competitive pricing asks, what are competitors charging? Neither of the questions identifies opportunity. The better question is, where is the biggest opportunity in this market? To answer that, you need to look beyond your current segment and evaluate the entire market. That's where pricing gap analysis comes in. So what is pricing gap analysis? Pricing gap analysis looks at your entire market and breaks it into different price segments, from the budget end all the way to the premium end. For each segment, you evaluate four things. First, how much demand exists in that market. Second, how many competitors operate and how strong they are. Third, who are the typical customers? And fourth, what is the profit potential within that segment? Once you map out those factors across the segment, something interesting usually appears. The segment attracting the most competitors is often not the most profitable segment. It's simply the most visible segment. Meanwhile, there is often another segment where demands remain strong, competition is relatively low, and margins are significantly better. The hidden opportunity is in the pricing gap analysis. Now, let's look at a real example from a private school expansion in Nairobi. So let's say the situation is that a private school group was planning to expand into Nairobi private education markets. Their first instinct was to target the premium segment, the expensive schools, the prestige schools, the schools many parents aspire to send their children to. Before investing, they decided to analyze the entire market. They wanted to understand the distribution of schools across different fee levels. They wanted to know where competitors were concentrated and where demand existed. Now, the results they got changed their strategy. So from the analysis, they discovered that the premium segment charged between 80,000 to 120,000 Kenyan shillings per term. So now they discovered that the premium segment charges between 80,000 to 120,000 Kenyan shillings per term, and 11 schools were competing in this segment. 11. The same audience, the same positioning, the same value proposition, the same battle for attention. Now, when they look at the upper middle segment, that is the segment immediately below the premium segment, they discover that schools are charging between 45,000 to 75,000 Kenyan shillings per term. And then there are only two strong competitors serving that entire market. That's roughly 40% of total market demand. When you think about that, that's 40% of demand and only two major competitors in that segment. So when you compare it with the premium segment, it has about 25% of total market demand, and then you have 11 competitors. The school group realized they were about to enter the most competitive segment while ignoring a much larger underserved market. So they changed their direction. Instead of launching another premium school, they targeted the upper middle segment. The result was one of their fastest enrollments ever. And that's not because they built a dramatically better school. It's not because they have a larger marketing budget. is because they entered the right segment at the right price point. So how do you run pricing gap analysis in your business? The first thing you have to do is divine the full market. So divine the entire market. Don't focus only on your current position. Look at the full range of pricing options available in your industry. For example, in manufacturing, you can have from basic entry-level equipment to advanced industrial system. In real estate, it could be from affordable housing to luxury apartments, while in finance, you can have free product to premium advisory services. For step 2, you should break this market into meaningful pricing tiers. Usually 3 to 5 categories work well. The goal is to reflect how customers actually think about affordability and value. For step 3, you should evaluate each segment. Look at demand, look at competitors, look at customer satisfaction, then look at potential profit. Look at customer characteristics, look at profit potential, and determine whether the segment is growing or shrinking. And then step 4, look for mismatches. Where is demand strong but the competition is weak? Where are customers underserved? Where are competitors overlooking an opportunity? And there's where your pricing gap is likely to exist. So how can AI help you with this? Now, all this becomes very fast when you use AI to help you analyze the markets. The framework uses a dedicated AI prompt that evaluates each pricing segment based on the share of the total market demand, the major competitors in the segment, the customer profile, the profit margin potential, and whether the segment is growing, stable, or declining. And most importantly, the analysis identifies which segments are overcrowded, which segments have weak competition, which segments contain unmet demand, and where a business should position itself for strongest opportunity. Now let's do a quick demo to show you how you can use the pricing gap analysis prompt in AI Mastery for business leaders to do pricing gap analysis for your industry. So I'm going to go to ChatGPT. I'm going to copy my prompt and I'm going to paste it. So I'm going to use the data analysis market for this in Nigeria from entry level to premium. So again, if you want to get better results with this research, you should use deep research. It takes more time and give you better results. So, but we're going to stick with this and see what we can get. Now let's look at the results. Nigerian Data Analytics Market Analysis, 2026 by price segment. So it gave us the scope and the important notes. Then talk about the market structure, the different segments, their typical price, the estimated demand share, and competition level. So for DUI or freelancers, they charge the lowest and they have the market share of 30% and the competition is very high. For SME analytics, they charge between 500k to 2 million naira. They have market share of 35% and the competition is very high also. The competition is high. For mid-market managed analytics, they have market share of 20%. Competition is moderate. Enterprise analytics, they charge up to 8 million to 30 million. Competition is moderate. Then for strategic AI and data transformation, they charge up to 30 million to 200 million. And they have low market demand and then they have low competition also. Then it goes into details segment, their price point, the deliverables, the typical customers, the competitors, the profit margin, the growth outlook. So we did it for each of the segments. Now, when you're looking at these results, you can be able to decide on which of these segments you have to base your own price point. And if you have the opportunity to compete in this price point. So this prompt is adaptable for any industry. You can always use it for any of the industry you want, and you're going to get good results also. So it helps you to decide on how you should price your products and services. So strategic opportunity map, it gave us like that. So freelancers have the lowest opportunity out of 10. SME analytics 9 over 10, and AI transformation has the biggest opportunity, that's 10 over 10. So the conclusion and the lives. Now you see how AI can help you do this pricing gap analysis faster than if you have to do it manually. Now beyond finding the gap, chapter 2 also gives you a complete pricing strategy system, the pricing philosophy, the category specific pricing, the tiered pricing structure, the competitive response rules, the discount policy, the premium pricing opportunity, where you can charge more than you currently do, and the financial impact modeling. If you need the ready-made prompt for all these things we've discussed about in this video, you can get it in AI Mastery for Business Leader in Chapter 2. The link to the book is in the description of this video. If you find this video helpful, please like and subscribe. Again, my name is Tim Lane. I am a retail program manager and AI mastery coach for business leaders and professionals. I help people to master the use of AI to progress in their career and in their businesses. Thank you for watching this video, and I'm going to see you on the next one.